on the map. This is Ron Costa broadcasting live from the Mappable USA studios here in Las Vegas. And folks, are we in a recession? A lot of people think so. Who knows what that even is defined as? But we're going to talk about that today a little bit with an aspect of opportunity zones investing as well. So before we do that, let's introduce Vicky Hutchins from the QOZ Marketplace. Vicky, how are you today?
Oh, Ron, I'm so fabulous. I can hardly stand it. And Vegas is cooling down, which is also a good thing. This is our favorite time of year, fall, which leads to winter and spring, and that's why we live here. And we have, like you said, we have a great podcast set up for today. We're going to talk about recession and investing and how it impacts opportunity zones and just what type of investing works or doesn't work in these times that we're living through. So let's introduce our guest and let's get started.
Our repeat guest. He's been on the show before. Folks, say hello to Bob Hutchins. He's the CEO from the Ellavoz Impact Funds. Bob, how are you today?
I'm doing good, and thank you so much, Ron and Vicky, for inviting me to your podcast. I'm looking forward to discussing the future of opportunity zones.
Excellent. We
Same
always
here.
love having you, Bob.
Yeah, and you know, Bob, we were talking about this right before the podcast, how quickly time is going by. We did a podcast with you. Seems like yesterday, but it was actually almost about a year ago, almost a little less than a year. And man, has time gone by? Yeah, crazy stuff.
Oh,
huh?
yeah, it certainly has. It certainly has,
Yeah.
and it's a different world today.
It sure is.
Different world.
Yep. And so before we get into the actual show here, let's talk a little bit about yourself and Ellavoz. What are you? Tell us about what you guys are doing over there and how and your background as well.
Sure. Well, my background is I'm a certified public accountant. I was a tax partner with a national accounting firm, and my practice was primarily made up of very high net worth individuals and families with closely held businesses. As a tax advisor on the income and estate tax minimization side, as well as I am a certified valuation analyst and did prepared valuation reports for closely held businesses, which led me into serving as an intermediary to ultra high net worth families in evaluating private deals for investment, mostly direct investment, like angel investing. So that was my career. A couple of years ago, 3 years ago, as I retired out of public accounting and went into impact investing, in particular, looking to leverage the significant income tax benefits of opportunity zone investing. We opened up Ellavoz Impact Capital to manage opportunity funds as well as impact investment funds that are not OZs but have very high social impact. Ellavoz's mission is to create place-based value. We go into the most underserved communities and look to increase value in those communities to the existing residents by adding quality, dignified housing and working with stakeholders on the ground to assist the communities in reaching their goals.
Oh, very nice. Impact investing kind of goes hand in hand with opportunity zones in that whole program because trying to elevate the condition of distressed areas, but also to elevate the quality of life of the people that live there. So impact investing is very important and works hand in hand with the Opportunity Zone program.
Absolutely, Vicki. We take a shared values approach to our investing. Shared values means that we equally consider the impact that we want to affect in the communities that we invest in, as well as provide a risk-adjusted, reasonable return to our investors. We are a direct investment vehicle, which means that we are pretty much supporting our ultra-high net worth individuals, family office and businesses, their ability to directly invest in social impact. It's a little bit different than what anyone else is doing. That's our niche. It's a small vertical, but we're very committed to that mission. And within the Opportunity Zone, tax benefits gives us a lot of opportunities to bring tax benefits to these individuals while at the same time equally sharing in that social impact.
Right, which is why the Opportunity Zone program, as well as impact investing, is so important, because it combines those two things, but it gives the folks who are investing in these types of investments, it kind of touches their heart, and it allows them to give back to humanity.
Exactly. It's legacy investing. It's not philanthropy. They're not writing a check and never seeing it. It is, in fact, investment in America. We're reinvesting in once great communities, building them back up. It's good for society. It's good for America. It's good for everybody.
Yeah, I like the term, legacy investing. That's a good term for the whole thing that you guys are doing.
Exactly.
But Bob, when the Opportunity Zones program started a couple of years ago, the world was in a little bit of a different place here, and now fast forward to where we are right now. There's many people will say we're in a recession, and we're in recessionary times. Inflation, gas prices, stock market, collapsing. Everything's bad for the most part. But what do you think about that? Are we in recessionary times? What does this mean for like an Opportunity Zones program in general?
Well, I'm not Ben Bernanke, who just won the Nobel Prize, but I do have my thoughts on the macroeconomics that we're going through right now, and one of those, or a few of those, I'll discuss. I think number one, I think inflation is here for a longer time than we think, and that's primarily caused by poor central bank planning. The Fed was late in raising interest rates, and the quantitative easing was just out of control. We're at $31 trillion of debt. At some point, these kinds of mismanagements of the economy have to come due. So inflation is a real concern. We have war between Russia and Ukraine. Anytime there's active war, that does in fact leave a lot of hesitancy and neurosis in investors. We're talking the relationship between China and the U.S. is not at its best. Taiwan is an issue which is constantly being discussed. These are things that all affect where money goes. So I think we're going to be struggling for a few years, a couple of years at least, to regain supply chains through a new type of globalization. And you can see China, Russia, to some extent India is working together in their globalization. India may go one way or another, or go both. Europe, hopefully, and the U.S., and I think the U.S. and the North and South American continent is seeing itself as a much more valuable supply chain, or reliable supply chain, than the globalization supply chain, where we were basically funding economies that were raising military strength, which could be used against us. So these are all things that, from a macroeconomic standpoint, as I look at them, I say we're going to go through a couple of years of global retrenchment, and then we need to accept that. So what does that mean for opportunity zone fund managers and investors? Well, in its simplest form, an opportunity fund or an opportunity zone investment is another type of alternative investment. It's a highly tax sophisticated investment. It's a long-term investment. And it's suitable primarily for high net worth individuals that are interested in these types of benefits. Alternative investments have always been more suitable for institutional, family office, ultra high net worth individuals. And we see now, and there's been a lot written about the excess liquidity going into family offices, private equity funds, venture capital funds. If we look at the valuations on the investments in alternative, going into alternative investments, such as a venture capital firm, we see tremendously optimistic valuations. We just went through 10 years of good times. The parties were running. The parties were running all night long. And we had, over that 10-year period, we had over 1,000 unicorns valuations. Just by definition, if you have 1,000, it can't be a unicorn. It's
right.
Right? It's
right.
So the certified valuation analyst in me comes out and said that opportunity zones, in the truest sense, if they're carrying out their purpose and they're honest with their investors, cannot compete with the sale of unicorns that are flying all around, or other forms of alternative investments that have had unreasonable valuations over the last couple of years. So there's going to be there already is a real pressure on private equity and VC firms to hold down valuations. They're giving they're competitors to opportunity zones, and we need to realize that when we sit down with an investor, he says, well, I can get this at this PE firm, or I can get this with a venture capital firm or something. So in every sense, these valuations, I think, have been detrimental to good OZ investment. Now these valuations are under strict review. I call it a market reset. And as an analyst in valuations, one of the core equations is, what is the equity risk premium? Earnings risks results in a higher equity risk premium. When you add the higher equity risk premiums to higher 10-year Treasury rates, you get you get cap rates that are much higher, and you get valuations that are significantly lower. So in our practice here, where we represent investors, we're not real estate developers, we represent investors in impact investing and opportunity zone investing. It's actually a good thing. Look, it's actually brought out a lot more interest in what we're doing, because there is an oversupply of money for investment, and now they're being much more careful about where they're investing their money. So I actually think that this reset, this market reset, this return to sanity in valuations will give opportunity zone investing a better chance to compete with other types of alternative investments in a fair marketplace. And we're seeing that with a significant amount of more interest coming into our office, both on the OZ side and in our non-OZ social impact fund, which is Ellavoz Neighborhood Homes Fund. And there's a lot of interest in the OZs. also our Ellavoz Shared Values Opportunity Funds 1, 2, and 3. So that coupled with the idea, with the realization that a $31 trillion deficit, that it more likely than not you'll see higher taxes on capital gains in, if not the immediate future. I mean, it depends on elections, of course. But if you look out 10 years, and most of our investor clients look out 10 plus years, they look out a generation or more, they realize that from a standpoint of capital gains or taxes on capital gains, it can't go lower, it can only go higher. So opportunity zone investing, from a tax standpoint, it becomes more attractive given the inflation and the realization that budget deficits are just going to go up until there is a significant tax increase here in America. All these things, they're not good for our economy, but they reflect a reset, I keep using that, of valuations, which will make opportunity fund investing much more attractive.
Well,
we particularly like... Yeah, go ahead.
You particularly like what?
We particularly like the space that we invest in. Workforce housing is workforce housing for families in the 80 to 100% of area median income. Affordability in housing, which is 60 to 80% of area median income. There's a huge lack of supply nationwide for housing affordability. The so-called starter homes and quality rental housing is not meeting demand. So what we have is all this supply of money in alternative investments, and suddenly everybody has to get sober. You know, it's been 10 years of drinking the Kool-Aid and smoking whatever they're doing. Now suddenly everyone has to sober up and has to deal with true intrinsic valuations, which I love because we only invest with intrinsic valuations.
Well,
when you put the economics of one alternative investment, compare it to another, and then you add on to the OZ the exclusion of capital gains with a lower equity risk premium that would be applied to investments such as workforce housing, etc., we feel that we'll have a lot more competitive edge for allocating capital toward our funds. So we actually think that it's going to be good for us, just in that kind of a reset. And there are other reasons I could go into that we also think that we'll succeed in the next 3 to 5 years.
So, Bob, would you say that in light of how everything is relative to each other, that this inflation, recession kind of impact on everything at a global level as well as a national level, are you finding that investors have, like you said, stopped and now they're reevaluating where they invest? Are there more investors investing more or less money, as you say, in alternative investments like opportunity zones or impact investing? How do you see what investors are looking at to decide where exactly they should invest their money because of inflation, recession impacts around the world?
Well, there's a couple of things. We're getting calls from registered investment advisors whose clients are reading a considerable amount of information which is negative to ESG. That while ESG was the flavor of the month for so long, there's been a lot of narrative on how measuring ESG and the discretionary, almost marketing department driven material, greenwashing is what a lot of people call it. We now see investment advisors looking for impact investments to satisfy the social investing needs of their clients. So we've been talking with a number of broker-dealer investment advisors and RIAs who now are looking at impact investing. And impact investing is very different than ESG investing, in my opinion. And so since we are impact investors first and foremost, we have been fortunate to get quite a bit of that traffic.
Yeah,
I think that
I was going to say, Bob, the ESG investing is a nice little buzzword and everything, but it gets down to the basic, I guess, caveat of opportunity zones. Really, any investing is that your deal has to pencil out and make money, right? Just because it's an opportunity zone fund or opportunity zone deal doesn't mean it's a great deal, right? Just because it's an ESG thing, it doesn't mean it's a great deal. It's got to make money for the investor, right? So that's a concern that a lot of these people have, I think.
Well, I think they have a couple of concerns. One is that are they buying stock in a company that really does have social purpose? ESG, I read ads all the time. There's one very prominent investment house that talks about how they'll take you on their ESG journey, which I find a little ironic because ESG is a risk, is a risk measurement metric. It's not a journey. There is no destination.
Right.
And it's purely risk averse. So you're at its best, you're investing in companies or projects that do no harm. There is no intention to ESG investing. Impact investing is intentional investing, and
right.
Investors are looking for intention. My intention is to invest in a project that has net zero carbon. My intention is to invest to make an investment that changes the neighborhood, reduces crime, makes healthy housing, better security, and affordable housing. So the ESG doesn't really live up to its initial marketing claims. Impact investing now is becoming very, very popular because that's what investors are asking their advisors to get them. And so we've seen a lot of traffic toward our offices in that respect, and a number of broker-dealers are forming impact investing divisions, and we've gotten some calls on that also. So we think that's a real positive for us.
Yeah, and a lot of your clients are family offices, is that right?
Yes, we deal with quite a few very ultra-high net worth families where we provide strategy, tax planning, we provide impact investing, advisory services, etc., so that these families are allocating a portion of their capital to impact investing. They're allocating, where appropriate, capital gains toward our impact opportunity zone funds. So yes, that is our primary investor
right.
at this point.
And
yes.
And these family offices they're really sophisticated investors. They really are smart and intelligent, obviously. So when you talk about these funds, they understand that it's a long-term investment, like 10 years. They're looking to do this for tax benefits as well, right?
Oh my God, yeah. They don't want to sell. They would just as soon stay in the partnership to 2045. They're investing for their grandchildren. They're not investing for themselves. If they stayed in the deal to 2045, they could get that entire step up right to 2045. We also manage private label, captive opportunity funds for some of our higher, our really super rich clients, where they have they developed an OZ strategy for developing themselves, and we help them with that. Find deals, co-develop with them, and help them in that side, manage the fund, so on and so forth. But that's not an Ellavoz brand. That's a captive. So there's more interest in that too.
So when these really sophisticated family offices come to you and you say something like, well, we may be in a recession, their attitude then is just to kind of shrug it off and say, well, still, it doesn't matter. This is still good for opportunity zones, right? They're still really bullish in the opportunity zone space as of today, right?
They are, yes, because my family office clients have not paid for these valuations. They're highly liquid right now, and they see this as an opportunity, not as a crisis. So
then they can wait.
Oh yeah, sure, yeah, absolutely. They
can afford to pay.
They liquidated a number of very high value properties, two of them, and put it into a captive OZ, and now they're moving that OZ into impact investing. Family offices are extremely sophisticated. They are highly comfortable with alternative investments and private equity. The average family office, I think the stats are that they only have about 20% of their net worth in marketable securities. Everything else, and we fit into the family office space because we are a direct investment fund. Our funds are built specifically for family offices. We have no carried interest, right? We're direct investors. When a family invests $10 million in our fund and we invest $1 million, or they invest $9 million and I invest $1 million, or we invest $1 million. At the end, if we doubled our money, they're going to get $18 million and I'm going to get $2 million. And the only difference is...
And everybody's happy.
Yes. So our funds are not built to make us rich. Our funds are built to invest side by side in impact investing with our very high net worth individuals. Yeah, that's another thing that differentiates us from the others.
Yeah,
right.
although
so,
$2 million
Bob,
is nothing to sneeze at, though, right? But
So, Bob, why don't you tell us about impact angel investing?
Well,
you do that as well.
We do, yes. We do impact. We have an impact angel network of accredited high net worth individuals who like to invest as angel investors or in an angel fund capacity. These are all entrepreneurs who built up their own businesses, and it gives them an opportunity to help finance the next generation of entrepreneurs. Now, what we're doing a little differently than most is that we have a program called Boomers Funding Zoomers. And we decide that, and the Zoomers are the most entrepreneurial generation yet in this country. And so we have a partnership with New Jersey Institute of Technology, which is the number one entrepreneurial school in New Jersey. Their graduate school of entrepreneurship, where we do two things. We participate in their entrepreneurship award, which previously was just $3,000. We upped that to $15,000. So we now give $15,000 to a student who has the best idea for an impact, a company that can show social impact and financial reward. But more than that, after the competition's done, not only is the student get the $15,000 grant from Ellavoz Angels, but we'll be taking the 6 or 8 best entries, and we'll give them a chance to pitch their business to our angel network. And then we can, and then our angels will decide if they want to invest in these young entrepreneurs. And so it's very hard to get startup money. Nobody wants to do that, or at least not the institutional VCs. You can talk to what they call startup VCs, or they're not really startups. They're all right. So I've been an angel investor and an entrepreneur my whole life, and so my network of colleagues are the same way. They started from scratch, built up businesses, sold them, and so we're looking to find both great business models that show social impact, whether that be in healthcare or climate change or whatever, but it has to have social impact. It don't come to me with an idea for a pornography website or something. We're not going to do that.
Well, that has a lot of social impact.
Well, it does, negative, but yeah. Let me say positive.
Well, I mean, in Vegas it does. If you live in Vegas, Bob, it has a lot of impact.
But we're not in Vegas, Vicki. We're in New Jersey.
I was going to ask you, Bob, how do you decide how does your angel network decide what projects? Do you keep them in a certain location, or do you go all over the country to find the project that you?
We're here in New Jersey, and New Jersey Institute of Technology, which is one of the leading national entrepreneurship and engineering schools, has a very generous supply. So we are partnering with them to fund their entrepreneurs. We may expand that to other schools. There's competition that other schools can bring to New Jersey Institute of Technology, but they're New Jersey schools. So at the present time, we're concentrating just on New Jersey in our angel network.
Oh, very good.
Right.
All right.
That's a smaller portion of what we're doing, and an excuse for us to get together and have a good meal and talk to some young people that are, have big dreams, and maybe offer some advice.
Lots of passion.
Be a mentor. Yep, exactly. Right, exactly.
Yeah, sounds good, Bob. Listen, before we end this podcast, I want to go back to what you said earlier about working with these family offices and how they're still bullish on this whole opportunity zones thing in general. I don't know if people out there understand how difficult it is to get a family office as a client. I mean, these people are so sophisticated, and they have their sphere of influencers, et cetera. And for you to be part of that whole group, man, you must be doing a great job, because it's not like you just call somebody up and say, hey, I want to talk to the guy in charge of the family office, and already you're doing the deal. I mean, you're talking about years of doing phone calls back and forth before they can trust you for something, right? So congratulations on that. That's a great accomplishment for you.
Thank you very much. We are very fortunate to have these clients, and we provide a very high level of advisory services for them. And we developed our funds to meet their needs. They're low fees, transparent. So we work for them. That's
exactly
further. Yeah, that raises the level of trust that we're doing the right thing for them.
Right. And then later on today, when I go to the gas station to get gas, I'm going to think about this podcast. I'm going to have a better feeling about inflation and the economy and the recession in general, because I think we've talked about a lot of positive things here. So that's a really good thing. What about you, Vicki? What do you think about that?
Well, I think you're right, Ron. I think there's a silver lining in everything. And if there's a silver lining in opportunity zones and impact investing, maybe, inflation brought that silver lining to cause more people to reevaluate how they're investing, where they're investing, and how much they're investing, and just to learn in general alternative ways of investing. And that's what Ellavoz and Bob is doing, that I so congratulate you for, Bob, because you take the real true concept of the Opportunity Zone program as well as impact investing to actually do the thing that it was meant to do, which is to elevate the communities as well as to elevate the quality of life of the folks who live there and show them a better way. And kudos to you for being able to accomplish that as you have, Bob. That's special. That's fabulous.
Thank you very much. Appreciate that affirmation. Thank you.
Yeah, and last thing, Bob, people want to find out more about impact investing and Ellavoz. How do they get a hold of you? What's the best way to reach you?
Well, our website is Ellavoz, ELLAVOZ.com. I am Robert at Ellavoz, ELLAVOZ.com. And my direct phone number, cell phone, is 908-330-2029. And I look forward to talking to people about opportunity zone investing, impact investing, and how they can benefit by it.
Yeah. Well,
and they should absolutely contact.
Exactly. All right, Bob, listen, thanks for being a guest on the show today. Really appreciate it. And Vicki, thanks for co-hosting this episode. Folks, you're listening to the Mappable USA podcast at MappableUSA.com. If you scroll down the homepage right there, you'll see all our syndication sources. Pick the one you like best and subscribe, and you'll never miss another one of our shows. And if you want to be a guest on the show like Bob was today, there's a guest tab there. Fill that out. We'll see what you can do about getting you on the show. And if you like what you heard today, send us an email at info@MappableUSA.com, or just leave a comment on whatever page you're listening to us on right now. So thanks for listening. Thank you for your support. We'll see you next time with another Mappable USA podcast. Have a great week, everyone.